Hello traders, welcome to the video. In this video, I'll be showing you a very quick strategy that you can use to scalp the boom and crash market. We are cashing the retracement to the downside, as we all know that the bull market spikes to the upside, so we are selling the market to the downside. And for the crash market, as we all know that the crash market spikes to the downside, we are buying the crash market to the upside. So if you look carefully on my chart, this is the 1 minute time frame and this is boom 1000. So the only time frame we'll be using for this strategy works very perfect on the boom and crash 1900 and 600 market. But I'll be using the boom and crash 1000 for my examples. So everything I'll be talking about in the bull market is basically opposite to what you see in the crash market. And if you look down here, I have just two indicators. I have the RSI, which helps me measure the 80 level and the 20 level. The 80 level is the overbought level, in which when market buys to a particular level, it sells to the downside. And the 20 level is the oversold level, where when market sells to, it buy to the upside. Before I explain how the strategy works, because I want this to be as short as possible, let me quickly show you how you can set up your chart. So first thing you do is to click on this indicator icon over here. As said, I have just two indicators, RXI and the Ishimoku. To select the RSI, click on the F icon on the main chart. Scroll down a bit. This is relative strength index. Click on that. Make your period to be 16. Apply to typical price, styles, 1 pixel, and select color of your background. If your background is black, you select black. If it is white, you select white. The main thing we need are the levels. Click on this pen icon to add level. Add. Type 80 and 20. Style, make it 2 pixel and select color of your choice. After that, click on save. For the second indicator, which is the Ishimoku, click on the F icon on indicators Windows 1. Ishimoku, click on that. Make this to be 6, this to be 6, this to be 52. Then fill this one. Then for this one, make it 3 pixel and select color of your choice. This one, make it 1 pixel and select color of your background. Then the up como, make it 3 pixel and select color of your choice. The down como, make it 3 pixel and select color of your choice. The Shuku span, make it 1 pixel and select color of your background. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. This strategy is a very simple and straightforward one. First thing you want to notice is the zoom level. So let's say this is the innermost zoom, you will zoom out 3 times. 1, 2, 3. So this is the best zoom level for this strategy. Then what are we looking for? First thing we want to pay attention to is this black line that you see over here. Let me zoom in so that you can see carefully. This black line, and also the shaded area of the Ishimoku, the green or the red. You want this black area to enter into the 80 level. At the same time, you want this green Ishimoku to enter into the 80 level. So I'm not talking about touching. I'm talking about it should dip inside it. So you can see over here. So immediately you have this black entering into this green or the red, depending how the case may be. So you will enter your sell and count just 5 candles. So you can see over here, entry will be at this point. Let's say you wait for one more candle, you will enter a sell and count your 5 candles. Then you close your trade and wait for another opportunity. So that is the only thing you will be doing in this strategy. You don't even need the higher time frame. Although if you go to the higher time frame to check the 15 minutes to determine the trend of the market, it will be nice, but you don't actually need it. So let me show you more examples so that we understand better. You can see this did not enter into the 80 level, so we have no trade. So over here we have an entry. You see this black Ishimoku enters into the 80 level. The same time green enters into the 80 level. So immediately you have this black entering into these sheets. Then you will take your 2. Your entry will be at the second candle. After it enters, enter a sell and count your 5 candles. Then you wait for the next opportunity. You can see this over here. Black pushes into that level. Green enters into that level. So you can see that immediately it enters, there is a small spike before it enters. So this is why you wait for when it enters into the shaded area. But most times, if you have a spike after it enters into the shaded area, the spike is always small and then you can recover your loss if you are patient. But anything that can make the candle go above this high, just close your trade and assume that that is a loss. Over here is also another one. Focus on this black Ishimoku enters into the 80 level. At the same time, the green shades enter into the 80 level. So the next thing you wait for is when this black is going back into the green area. So over here, enter your sell, count your 5 candles. Sometimes you can count 10, but what I see to be very profitable is that 5 candles. Here is also another one. Enters into the 80 level, green enters into the 80 level. Wait for when it enters into the shade. You see that it did not enter at this point. We still have a spike to the upside. So you wait for when there is entry and then one candle closes below the entry. Enter your sell and count your 5 candles. You see that all the examples that I have been given, market has been generating up to 10 candles. You can see at this point 10 candles and the previous examples. So let me go to the crash market and show you how it works over there. If you look over here, like I said, the 20 level is the oversold level, and because we want to buy the crash to the upside, so we are focusing our attention on the 20 level. But in the bull market, we focus our attention on the 80 level. So what are we looking for? We want to see this black dips into the 20 level. At the same time, the red dips also into the 20 level. So you can see it at this point, Then once you have this black entering into this red, you see it here. Wait for one candle, enter a buy and count your 5 candles. Hope you understand what I am saying. So let me show you more examples so that you will understand better. There is another one at this point. Entry into the 20 level. Another entry of the red shade into the 20 level. You will wait for when there is entry here. Wait for one candle, enter a buy and count your 5 candles. You see how market eat your TP. This also another one. So this setup, you can have up to 20 setups in a single day from one single pair. So let's say you combine boom and crash market, because you cannot cash all the 20 trades, but let's say you can cash 10 trades each. So that is 20 trades in the boom and crash market with a win rate of almost 95%. Just know that you are already in profit. So you can see over here, this black pushes into the 20 level. Then you wait for when this black enters into that red shade. So once you have that, you will enter your buy. Like I said, if you have a spike down, it is always a small spike. Then you can recover your loss. After that, you close your trade. But one thing you don't want to see is this low be taken out, because this is the protected low. That is what I want to show you for this strategy. After this, I want you to go back on your chart, back test this strategy. Try and trade it with a demo account in a live moving market. Test this strategy for at least 2 or 3 weeks. And if you see how good it is and you know that you can stick to it and you understand it, then you can decide whatever you want to do with the strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.